don't know why people complain about being in debt because this is the happiest I've ever been. Basically, I got an infinite money glitch hack.
I saved up for a house, and I blew my whole house deposit, taking me and my dad out here.
Dare I ask how much? Cover your ears.
A good 40,000 English.
Today I decided I'm going to be cashing out my entire retirement.
Today we're going to be taking a look at the worst money decisions people made in 2026. Starting with someone who discovered an infinite money glitch.
I don't know why people complain about being in debt because this is the happiest I've ever been. Basically, I got an infinite money glitch hack, and what I do is after I spend all the money in my checking, I use my credit card and I max it all out. And by the time it's maxed out, I'm getting paid again. So I just pay off the debt and I go back into debt, and it's like infinite money glitch. And the reason why this makes me so happy is because I can afford hair, nails, like new clothes all the time. Like, this is the best.
So the infinite money glitch is spend your paycheck, max the credit card, use the next paycheck to pay the card, and repeat forever. That's not a glitch. That's the oldest trap in the book with a Gen Z name on it. She has invented living paycheck to paycheck with extra steps and a 25% interest rate attached. And here's the fun part of the loop she hasn't hit yet. The first month anything goes wrong, a car repair, a lost shift, the paycheck doesn't cover the card, the interest starts compounding, and the glitch reveals what it always was. The infinite money was her own salary the whole time.
I took out a 20 grand loan just so I could see what it was like to be unemployed for 6 months, and so far, it's pretty great, I'm not gonna lie. Follow along to see how things go, guys. I've done this so you don't have to.
He took out a $20,000 loan to experience unemployment, voluntarily as a content series. And look, I'm fairly sure this one's at least half a bit, but let's take the premise seriously for a second, because the math is beautiful. He's paying interest for the privilege of earning nothing. A sabbatical is when you save up and take time off. This is the reverse. He rented 6 months of free time from a bank, and the bill for this vacation starts the moment it ends, plus interest, with an employment gap on the resume as a bonus. I've done this so you don't have to. Correct? Nobody has to.
I don't know who needs to hear this, but take all of your money out your savings account and start spending it on alcohol. Do it now, because the issue with having money in a lifetime ISA is it could go up and down, whereas you take it out, you go down the pub, you spend it. That's not your problem anymore. It doesn't matter where it goes because you're drunk at that point. So
the issue with a savings account is it could go up and down, whereas beer is forever. Now this one is obviously a comedian doing a bit, and honestly, it's a pretty good bit. But I'm including it because the scary part is I have seen this exact argument made completely seriously on this app. Markets are volatile, money isn't real, so spend it. We covered a guy last episode away from saying this word for word without the punchline. When the satire is indistinguishable from the sincere advice, that's the actual joke.
I saved up for a house, and I blew my whole house deposit, taking me and my dad out here.
Dare I ask how much? Cover your ears.
A good 40,000 English. I'm Jack. I'm originally from Chichester in England, but I live in Melbourne, Australia. Ticket for the final, which is a joke, so about 4,000 English pounds. We've been to New York, we've seen the World Cup, and we're going to see us bring it on. Well, I've got no kids, I've got no wife, so why not?
40,000, an entire house deposit, years of saving, gone on a World Cup trip, including 4,000 for a final ticket that he himself calls a joke while buying it. And this is the hardest clip in the video to be mad at, honestly. It's a once-in-a-lifetime trip with his dad, no kids, no wife, why not? Here's why not. The house deposit was the once-in-a-lifetime purchase. Property deposits take most people the better part of a decade to rebuild, and prices don't wait while you do. The memories are real. So is starting the entire savings journey again from zero at older prices.
What did you get for 3,000?
31 images.
What kind of images?
30th birthday images.
Oh, birthday suit.
Mm-hmm.
On that journey. We'll love it. I'm kidding.
I've gained 60 pounds since my last photo shoot. Like, I have a whole new body that has carried me through so much. Like, Yes, I'm going to cry again. Wow.
But a photo shoot, 31
Digital
pictures
images.
for $3,000.
31
That's crazy?
Yeah. Usually like 3,000 is the rate for like a wedding.
How much would you charge for this?
I'm pretty pricey, so I'd do like 1,000.
Wow. All right, thank you, Madison. W. Madison. We love Madison.
$3,000 for 31 birthday photos. And then they bring in an actual professional photographer on camera who says $3,000 is what she'd charge for an entire wedding and for this shoot. She'd charge $1,000 and she describes herself as pricey. So the market rate for this from a self-declared expensive photographer was 1/3 of what was paid. Celebrating yourself is fine, milestone photos are fine, paying triple the professional rate while you're on a debt show is the part where the celebration became the problem. The photos captured a moment. The credit card statement captured it better.
What is one bad financial decision that you regret making in life?
Taking out a personal loan.
You took out a personal loan?
I did.
From who?
From my bank.
What bank was that?
Schools First.
Okay, why did you take out a personal loan from them?
I was trying to get my credit, debt down, but I just ended up spending more on my credit, my credit card, so...
Wait, so you used the loan to pay off the credit cards and then you paid them off?
I paid it off.
And then you reused the credit card?
Yep, yeah.
Damn.
Yeah. And the interest rate is really high on personal loans, so just don't do it.
Damn. Crazy. What did your parents have to say about that?
I didn't tell them.
You didn't tell them?
No.
They thought you paid your credit cards off.
Yep.
Damn.
Yeah.
And then what do we do for a living?
I'm a teacher.
Took out a personal loan to pay off the credit cards, paid them off, then filled the cards right back up. If that sounds familiar, it's because we watched Lindsay do the exact same thing with a $23,000 consolidation loan a couple videos ago. This is the most common debt trap in existence, and it has one rule. Consolidation only works if you close or freeze the cards afterward. Otherwise, you've just doubled your debt and called it a strategy, and now her parents think the cards are paid off. So on top of the two debts, there's a third balance accruing. The truth. That one compounds too.
You're absolutely right. What the hell was I thinking financing a $78,000 car for 72 months, putting $10,000 down on it and paying $1,100 a month before purchasing a home? You're right. But I have no excuse other than my mindset since I was in my 20s has always been that you have to owe to have, and you just put it on a card. I mean, I can make the payment, so can't we afford it? And so now, since we've started this journey to pay off all of this debt and to right all of my wrongs, now my mindset has totally changed. And so I am looking for every way that I can get out of these very bad decisions. One, of course, top of the list is this car. And I'm trying, but my hands are tied. And unfortunately, I don't think I'm going to be able to get out from underneath it. I think I'm going to have to continue to pay on it until we can do something else. I don't know, but y'all are absolutely right.
I can make the payment, so can't we afford it? That single sentence is responsible for more financial wreckage than almost any other in the English language. Making the payment means the bank afforded it. You're just renting the debt. And the timing detail matters here. A $1,100 car payment signed before buying a home is poison to your debt to income ratio, which is exactly the number mortgage lenders live and die by. The car literally shrinks the house you qualify for. Now, full credit, she's owning all of it publicly and trying to dig out, which is more than most. But you have to owe to have built the hole first.
One of my worst financial purchases was this Tesla Model X. I bought it like 3 years ago. This is actually this exact car because I sold it to a friend here in LA. And I bought it because I was like, you know what? I'm going to use this as my going out car. So when I'm too fucked up, I can just put it in self-driving mode. And I ended up doing that like twice and realizing this is fucking stupid. And ended up getting rid of it in 30 days. I got rid of it in a month, sold it to a friend, and I lost $46,000 in 1 month on this car, depreciating at. Also because Elon lowered the price of the new ones, so it was just so hard for me to even get out of this car, okay? Teslas.
Okay, I need to be completely serious for a second before we get to the money. He bought a car specifically to drive himself home drunk in self-driving mode, and did it. Twice. That is not a car feature, that is a DUI with a software subscription. Self-driving mode does not make it legal and it does not make it safe. The car requires an alert driver, full stop. Please never do this. Now, the money. $46,000 lost in 30 days, partly because Tesla cut prices on new ones overnight, which nuked the value of every used one instantly. When the manufacturer can reprice your asset with a tweet, you don't own an asset. You own exposure.
I'm gonna keep it a buck. I'm not paying for car insurance. That's dead. Mother's like, why you don't pay for car insurance? Blah blah. Gang. If you think I'm about to give you $500, I'm 3 years old. Do you know how much fucking insurance costs for a 23-year-old who ain't got a cosigner? You think I'm giving you $500 a month? If I give you $500 a month for insurance, I'm crashing my shit. I'm gonna flip this. I'm not joking. I'm gonna flip. Fuck, I might die. I'm gonna flip this bitch.
His argument against paying $500 a month for insurance is that if he paid it, he would deliberately crash the car and, direct quote, I might die. My man is negotiating with the insurance company using his own life as the hostage. So, a few things. Driving uninsured is illegal in almost every state, and the real cost isn't the ticket. Hit somebody without coverage and their medical bills and car become a judgment against you, garnishing your wages potentially for decades. A crash at 23 without insurance can cost more than the insurance would over your entire life. And the reason rates are $500 a month for 23-year-old men, the companies have met this exact guy before. He is the actuarial table.
One of my buddies got screwed over so bad purchasing a car. I told him the only way he's getting out of it is by totaling it. I told him to find the nearest tree in the middle of the night and run into it. Let me tell y'all this story. He tells me, he goes, yeah, but I've been looking at some other Chargers and stuff. He's like, I go into the dealership every week, and each car I like to make sure the payments are good, so I have them run my credit. I said, do what? My other buddy is just silent. I can hear the pain on the other side of the phone because I was feeling the pain. I said, please tell me you're lying, dude. He said, nah, man. I said, hey, I want you to get on Credit Karma. He said, what is that? I said, oh my God, it's as bad as I think. I walked him through how to set up Credit Karma. I shit you not, his credit score started with a number I could count on one hand, not using a couple fingers. Cody, you got to be sitting down for this shit. I'm interested. I'm like, what is it, dude? He goes, that guy, he bought a car. I said, okay, what is it? Well, he said, it's used. And I said, well, that's good. That's what we told him to do. I said, so what kind of car are we talking about? And then there was silence. I could hear him start laughing, and he goes, it's a Hellcat. Oh my God, dude. I couldn't believe what I heard. I said, well, how used is this Hellcat? He said, Cody, it's got 227,000 miles on it. My entire room starts spinning to afford anything else. Worst part is, here's the fatality of it. He said, it's 23% interest. Do you hear me? 23% interest.
Let's tally this masterpiece. A credit score that starts with a 4, earned partly by having dealerships run hard credit checks every single week as a hobby. Then, told to buy a sensible used car, he buys a used Hellcat with 227,000 miles on it at 23% interest. That's the highest mileage Hellcat I've ever heard of, financed at a rate normally reserved for credit cards. He got the worst of every world. Used car reliability risk, muscle car running costs, subprime interest. But one thing I have to say plainly, because the clip jokes about it twice. Do not crash your car on purpose. That's insurance fraud. It's a felony. The Hellcat is a problem. Prison is a bigger one.
Maybe I'm the problem because I don't prioritize saving money. I don't prioritize a retirement fund. I'd rather just get that portion of paycheck now rather than have it placed for a future that we are not guaranteed. I prioritize trying to find some will to live in the now and using my money, spending it while I'm living. Yeah, maybe I'm the problem because I don't prioritize saving money. I don't prioritize a retirement fund. I'd rather just get that portion of paycheck now rather than have it placed for a future that we are not guaranteed. I prioritize trying to find some will to live in the now and using my money, spending it while I'm living. Yes, if I was smarter with my money, in the past 4.5 years of living back at home, I definitely would have more than $2,500 saved. However, I only have $2,500 saved, and the only reason I even have that saved is because there's a fire lit under my ass because in less than 6 months, I am moving abroad to Italy. And obviously I need a savings for that. Like, I'm just living, and I'm budgeting and saving for the things that I have like a goal to utilize that money for, but I'm not saving for a future that I can't even like see, because who knows how long we have to live on this earth. I don't know. Maybe that's a hot take, but it is my take, and that's just how it is for me.
Now, if she sounds familiar, that's because she's been on this channel before, back when she had $400 to her name and was about to spend it on a one-way ticket to Europe. So, an update. Years living at home, $2,500 saved, buy now, pay later debts racked up, and a move to Italy in 6 months. But here's the thing she said that I actually want to highlight. The only reason she has any savings is because the Italy goal lit a fire under her. That's her accidentally proving the entire point. She's not incapable of saving. She saves fine when there's a reason. The future she says she can't see, that was the reason, the whole time.
Yeah, once you start spending money like you have money, there's no going back. Yeah, it doesn't matter if there's minus £5 in my account, I'm still going to find a way to spend that money. And then I'm going to deal with the consequences when I'm lying down in my bed reflecting on how I got into this position in my life. And you would think a normal person would adapt to their financial situation. No. My financial situation is going to adapt to me. I don't know how, I don't know when, but somehow it's going to adapt to me.
And speaking of returning champions, this is the same guy who told us he spends like he's already rich because he's convinced he'll be rich one day. The philosophy has now evolved. My financial situation is going to adapt to me. And I've got good news for him, because it absolutely will. It's called compound interest, and it's adapting to him as we speak at roughly 25% a year. The overdraft is adapting, the late fees are adapting. His financial situation is arguably the most adaptive thing in his life right now. It's just adapting in the direction of the bank's shareholders.
I am absolutely buzzing because I just deposited my 401k. Yeah. I deposited my 401k because I took it all out so that I could pay off my credit cards because your girl was drowning. I was drowning in credit card debt because I had lost my job when I was traveling Europe. So I had to put everything on my credit cards and I just like couldn't do it anymore. Literally crying to my friend. I was like, what do I do? Like, do I like file bankruptcy? Like, do I take out like a personal loan? I just like don't want to pay anybody back. Like, that was like the whole goal is to just like be done with this. Like, I just don't know what to do. She's like, wait, you still have a 401k from Warner when we worked there, because we worked at Warner together. And I was like, yeah, why? And she's like, pull it out. She's like, take that out and pay it. She's like, you know that you're gonna get a job soon again, and like you're just aggressively put into your 401k then. And I was like, you're brilliant, because I'm like, because of the interest rate. This is just what I've done that feels good to me, was to take out my 401k. It's an option. I feel like rich people do this all the time, so like, why are we not talking about it?
Feel like rich people do this all the time. Rich people do not do this, and there's a reason nobody talks about it. Cashing out a 401k early means income tax plus a 10% penalty, so somewhere around a third of that money evaporated before it touched a single credit card. But here's the detail that physically hurt me. She was considering bankruptcy in the same breath, and 401ks are protected in bankruptcy. Creditors can't touch them. So she drained the one asset that was legally untouchable to pay off the exact debt that bankruptcy could have wiped. It's the worst possible order of operations. The relief on her face is real, and I get it. The math is still brutal.
Corvo, I think there's something else you're not telling her.
So I did end up cashing out my 401k.
What? Why?
That was in late March.
Tell her.
Oh, you future. Well, we didn't have a 401k to look at, so I guess that makes fucking sense. Why would you not tell her?
Because I figured, because it was from the gun shop, that, you know, hey, it doesn't matter. It's my money.
Okay, so we could have used that to pay off some debt.
Yeah,
What'd you use it for?
So I bought a replica machine gun for my buddy.
This guy fucking the worst.
You just said my money. Why is that your money?
Because
that's not your money.
Because I contributed to it.
Are you guys married?
Yes, we are.
Oh, that's not your money.
I don't know. I disagree that I was putting all that money into it and I could have used it for what I wanted to.
You disagree that that's not y'all's money?
Yeah, I absolutely disagree.
So if she cashed out her retirement and didn't tell you, what would you say?
That's her choice, and whatever she wanted to spend it on is her ideas.
Yeah, probably
This is
something
not a
for the
This
house.
is not like that's not a marriage thing to say.
So the last chapter was cashing out a 401k badly. This is cashing out a 401k secretly in a marriage in March, revealed on camera months later, to buy a replica machine gun for a buddy. It's not even his replica machine gun. And legally, in a marriage, retirement contributions made during the marriage are generally marital property, so it's my money isn't a mindset problem, it's factually wrong. This is what's called financial infidelity, hiding money moves from a spouse. And researchers consistently rank it among the top predictors of divorce, right up there with the regular kind. And notice his hypothetical for her, she'd probably spend it on something for the house. Even his imagination is one-sided.
Today I decided I'm going to be cashing out my entire retirement. I recently discovered, which I should have researched earlier, that my retirement is doing really well because 16% of my mutual funds are invested in BlackRock. And it doesn't sit well with me. And I don't believe in this system anymore anyway. If you don't know, I'm Sarah. I quit my corporate job back in January. I've been a nomad all summer. I'm DJing now on TikTok and started a creator network and trying to build an app that changes the way that we work entirely. And I'm sitting here at Santa Monica Beach looking at the ocean and realizing that my $50K in student and credit card debt just isn't worth it. So, yeah, I just felt called to share that. And if you're in my family and you're seeing this, it's going to be fine.
Her complaint is that her retirement is doing really well. That's a first for this channel. Somebody upset that their investments went up. Now, if you genuinely don't want your money in a specific company, that's your right, and there's a boring, penalty-free way to do it. Roll the 401k into an IRA and pick different funds. You can divest without paying a cent in penalties. Cashing out the entire thing instead means taxes plus the 10% penalty to make a point the fund managers will never hear while carrying $50,000 in debt, no job since January, and an app that changes the way we work entirely. And when a finance video ends with, if you're in my family, it's going to be fine, it is generally not going to be fine.
So I lost $6,000 last week in gambling at the casino. I have a gambling problem. I'm just trying to think how stupid it is about how much money I just lost and what I could have done with this money. I gambled away a used car. That's how much I lost. $6,000. I lost a used car. I started off just losing a couple hundred. I pulled out some more money out of the ATM, and then I continued to lose, and I went back to the ATM and lose more and more and more. And all I did was continue to chase my loss. These casinos are not built on winners. They're built on losers, and I continue to go and lose my hard-earned money and just give it to the casino.
That's Mike, who we've seen on this channel before talking about his 24-year battle with gambling, and this is what a single bad night inside that battle looks like. $6,000, a used car, gone in one session. And he described the mechanism perfectly. A couple hundred lost, then the ATM again, chasing the loss the whole way down. That's why casinos put ATM steps from the floor. The machine that refills you is part of the machine that empties you. I'll say what I said last time. Him talking about it this openly is the strongest move on this whole channel.
The day that I last gambled, 118 Money were driving me ballistic because I'd agreed a payday loan with them. and they told me it was going to be instant on the website. And I'm sat in my car outside Betfred thinking, what is the holdup? I've got absolutely no money. I'd already taken out 2 payday loans that same morning and lost them both on virtual greyhound racing, which I'd never played before. I remember the guy saying to me, like, are you okay? Do you think you need to maybe slow down a little bit? And in 20 years of going into bookies, putting on some huge bets that are needed to be phoned up and authorized, losing multiple thousands of pounds on roulette machines in one sitting. No one had ever said that to me. And I remember I found about £1.86 in the console of my handbrake in my car. And I went into the co-op next to Betfred, just marching around thinking, what can I get for this? And I got some lentil chips, a big bag that were discounted, and just absolutely scoffed them while I was walking around in circles outside the Betfred, not wanting to drive away because in my mind, the money from this 118 payday loan is going to hit any second.
3 payday loans in one morning, all lost, waiting in a car park for a fourth to clear, and 1.86 in the handbrake console being the entire net worth of a 20-year gambling career in that moment. And notice the title he gave it. The Day That I Last Gambled. This is a recovery story told from the other side. The detail that stays with me is the cashier, the first person in 20 years to ask, "Are you okay?" Sometimes that's the whole intervention. If any part of this clip felt less like content and more like a mirror, support lines and groups exist in basically every country, and they work best before the 1.86 day.
Buying low-income housing has probably been one of my worst financial mistakes besides investing in a build that never actually existed. That was my worst financial mistake. I lost $1.3 million doing that, but my second worst financial mistake was spending about $800,000 on low-income housing for tenants that don't pay rent. Now you may think, oh, just have a do Section 8 and just get vouchers. You know, in Ohio, there is absolutely 0 people who have vouchers that are actually looking for housing. There is an extreme oversupply of houses and a under demand of people that need low-income housing. So I'm just sharing the other side of the table here. And just do a simple look on Zillow. Go on Zillow and look at low-income housing under like $125,000 houses in Ohio. There is a bajillion of them because everyone's selling them because they can't put tenants in and they can't get renters in. And then if you do get a normal traditional rental in, they don't pay their rent.
$1.3 million lost on a build that never existed, meaning the development he wired money into was never real. That's not a market loss, that's a due diligence failure, and it happens to sophisticated investors more than anyone admits. And then $800,000 into cheap Ohio rentals, which, if you've spent any time on real estate TikTok, you'll recognize as the exact Section 8 cash flow strategy the gurus have been selling for years. Buy cheap houses, vouchers pay guaranteed rent, passive income forever. He's living the other side of the pitch. Everyone bought, so everyone's selling, nobody's renting. Here's the rule. By the time a strategy is a course, the returns have already left the building. Over $2 million of tuition for that lesson.
I was rinsing the markets. Months on months I was making money. I thought I was that guy. I didn't see a month without a payout. But you know what happens? Last month I invested $10,000 minimum in challenge accounts. I had 400 to 500k in live funded accounts. It's like life said, F you. Because you know what happened? I also quit my job. I've lost all my challenges now. I've lost all my funding. But you know what? Externally, I'm broke. Internally, I'm rich. I see it as a story of Suleiman. Christian is known as Solomon. He lost everything. He showed gratitude. He stayed down till he came up. And he got everything times 2. This is a journey. I made this page just to show you guys that the highs with the lows. It's the law of polarity. You can't enjoy the highs without seeing the lows. Like, I'm going to embrace the lows. Yes, it's hard. Yes, Universal Credit's going to see a call from me.
And we're closing 2026 on prop firm trading, the newest machine for separating young men from their money. Quick explainer because the language hides it. Those challenge accounts he spent $10,000 on are entry fees. You pay a firm for the chance to trade their simulated capital, and if you break any rule, you're out and they keep the fee. The 400 to 500K in funded accounts was never his money. It was a number on their screen. The $10,000 in fees was his money, and it's gone along with the job he quit. The firm's profit because most traders fail the challenges. That's the business model. He's calling universal credit and calling it the law of polarity. Externally broke, internally rich is a beautiful sentence. Banks only check the first half. And that's all that I got for you guys today. Let me know what you guys think in the comments below. YouTube thinks you'll like this video popping up on screen right now, but hopefully you guys enjoyed this video. If you did, please leave a like, and I'll talk to you guys.